Hey there, teachers and public employees. Welcome to the Public Employee Retirement Training Channel, where we help public employees like you prepare and plan for retirement. In this video, we're here for California's public employees that help keep the state running. So how do we support them in their retirement planning journey? Today, we're breaking down the California Public Employees Retirement System, better known as CalPERS, one of the largest pension funds in the world. Whether you're a member, a new hire, or just curious, this video is your ultimate guide to understanding CalPERS. We'll break down eligibility, membership, contributions, benefit formula calculations, tiers, vesting, final compensation, survivor benefits, the future of CalPERS, its funding, and more. We have a lot to cover, so let's dive into it. Section 1. What is CalPERS? CalPERS provides retirement and health benefits to more than 2 million public employees, retirees, and their families. It's not a 401k. It's a defined benefit pension, which means your retirement income is guaranteed based on a formula, not market performance or your pension contributions. Section 2. Eligibility and membership. To be eligible, you must work for a CalPERS-covered employer, such as the state of California, a public agency, or a participating school district. You're generally enrolled automatically if you work half-time or more. To be eligible for CalPERS retirement, employees must be appointed to a job that will last at least 6 months, and one day, work at least half-time, and work for an employer who has contracted with CalPERS. Membership in CalPERS is generally mandatory for most California public employees, with some exceptions. Eligibility requirements. Employees must be employed by a CalPERS-covered employer. The job must be expected to last at least 6 months and 1 day. The employee must work at least half-time. The employer must have contracted with CalPERS to administer their health benefits program. Who is excluded from CalPERS membership? Employees of certain public agencies. Specific types of public agencies may have their own retirement systems and may not be covered by CalPERS. Employees who are covered by other California public retirement systems, such as CalSTRS, may not be eligible for CalPERS. Some positions, like those in elected or appointed offices of cities or counties, may be eligible for optional membership in CalPERS. Membership process. Once an employee meets the eligibility requirements, they are generally automatically enrolled in CalPERS. Okay, so let's talk about member contributions. As a member, you contribute a percentage of your pay to CalPERS. The exact amount depends on your job category and your pension tier, but it's typically somewhere between 7 and 11% of your gross salary. These contributions are deducted on a pre-tax basis. Your specific contribution depends on your employer and your bargaining unit. CalPERS has member contribution rates that vary based on whether you're a classic member or a PEPRA member. That's the Public Employees Pension Reform Act. Classic members usually contribute 7%, while PEPRA school members contribute 8%. For state members, the contribution rate depends on their bargaining unit, with rates ranging from 5 to a little over 13%. For example, in fiscal year 2024 to 25, state miscellaneous members contribute 8%, state safety members contribute 10.5%, and state peace officer and firefighter members contribute 13.25%. To find your specific rate, you can check the CalPERS website for the latest circular letters, or you can look up your retirement contract page within My CalPERS. Your employer contributes too, and actually, they contribute even more than you do. Together, these contributions are pooled and invested by CalPERS to fund the system and pay retiree benefits. On a quick side note, if you want to learn more about public employee retirement training or improve your financial literacy, create a financial plan for yourself and your family, or start planning for retirement but are not sure where to begin, be sure to check out the Retirement Roadmap and other resources in the description below. Now let's get back into it. Alright, now let's cover vesting. To vest or become eligible for a retirement benefit, you need to have at least 5 years of service credit. Once you're vested, you qualify for lifetime benefits when you reach retirement age, even if you leave public service. In CalPERS, vesting basically means the period you need to work before you have ownership of your retirement benefits and the right to collect a pension. Usually, most CalPERS members become vested after they accumulate 5 years of CalPERS credited service. Plus, you have to reach the minimum retirement age, which can vary depending on your retirement formula, like it might be 50, 52, or 55. So, let's talk about vesting and retirement eligibility. Vesting basically means you have ownership of your retirement funds, and you're entitled to receive a pension once you reach retirement age. For most CalPERS members, you need at least 5 years of CalPERS credited service to be considered vested. And you also have to reach your minimum retirement age, which is actually determined by your retirement formula. Now, when it comes to health benefits, vesting works a bit differently. State employees, for example, have a 20 or 25-year vesting schedule for health benefits. That means you have to work a certain number of years to get a full contribution from the state towards your health premium during retirement. Some CSU employees only need 10 years to meet their health vesting requirement. Public agencies can actually elect a 20-year vesting schedule, and schools have the flexibility to create customized schedules for health benefits as well. Alright, moving on to CalPERS tiers and formulas. CalPERS has several benefit tiers, and these are based on your hire date and your employer's contract. The two main types are classic members, who were hired before January 1st, 2013, and PEPRA members, who were hired on or after January 1st, 2013, under the Public Employees Pension Reform Act. Your retirement formula really depends on your tier and your job. It's usually expressed as something like 1.5% at 55, 2% at 60, or 2.5% at 55. The calculation goes like this: service credit times benefit factor times final compensation equals your annual pension. We'll get into this in a little more detail soon. CalPERS offers a defined benefit retirement plan with various tiers and formulas, all based on your membership type, employer, and when you joined CalPERS. First and second tier formulas, as well as those under PEPRA and Classic membership, all dictate how your retirement benefits are calculated. Okay, let's break down the key CalPERS tiers and formulas. First, there's PEPRA membership. For new members hired on or after January 1st, 2013, this formula typically offers a 2% benefit factor at age 62, with a higher benefit factor of 2.5% at 67 or older. Next, we have Classic membership. For those hired between January 15, 2011 and December 31, 2012, the Classic formula usually provides a 2% benefit factor at age 60 and a higher benefit factor of 2.418% at 63 or older. Then, there's the State First tier. This tier offers formulas like 2% at 60 or 2% at 62, with higher benefit factors at later ages, and it uses a 36-month final compensation period. Finally, we have the State Second tier. This tier typically includes a lower benefit factor, for example, 1.25% at 65, and a 12-month final compensation period. Members in this tier can convert to the first tier formula at any time before retirement. So, what actually impacts your pension? There are a few important factors influencing pension calculation. First, there's service credit, which is the length of time an employee works for a CalPERS employer. Next, the benefit factor, which is a percentage determined by your retirement formula and your age at retirement. Then there's final compensation, which is the average salary over a specific period, usually 12 or 36 months. And of course, retirement age, the age at which you choose to retire. It's also worth mentioning that local safety members often have different retirement formulas and benefit factors, with variations based on their specific bargaining units. Just to sum up, CalPERS retirement benefits are calculated using a formula with 3 factors: service credit, benefit factor, and final compensation. All right, let's talk about final compensation. Final compensation is based on your highest average pay over a defined period, usually 12 or 36 consecutive months, depending on your membership type and employer. Section 7. Purchasing service credit. Want to boost your pension? You may be eligible to purchase additional service credit, such as for prior public service, military time, or unpaid leave. Section 8. Survivor benefits. CalPERS offers survivor benefits to protect your loved ones. The specific benefit depends on your election at retirement and your employment contract. CalPERS offers various survivor benefits to protect the financial security of surviving family members upon the death of a member, whether active or retired. These benefits can include monthly allowances, lump sum payments, and potential continuation of health insurance coverage. The specific benefits available depend on factors like the member's status, active or retired, their employment type, whether non-safety or safety, and the presence of eligible survivors, like a spouse, domestic partner, or children. Key survivor benefits: pre-retirement death benefits, special death benefit. This is a monthly allowance to an eligible surviving spouse, registered domestic partner, or unmarried child under 22, equal to half of the member's average monthly salary. 1959. Survivor benefit. This is a monthly allowance payable to eligible survivors, in addition to other pre-retirement benefits, but not the special death benefit, if the 1959 benefit is greater. Limited death benefit. This one is a one-time, lump sum return of retirement contributions and interest for members who separate from CalPERS-covered employment. Post-retirement death benefits, survivor continuance. This is a monthly benefit paid to eligible surviving spouses or registered domestic partners, which can be 1/2 or 1/4 of the retiree's unmodified benefit. Continuation of health insurance. Surviving spouses, registered domestic partners, and children may have their health coverage continued automatically when they are eligible for a monthly death benefit and were covered dependents. So let's talk about some important considerations when it comes to survivor benefits. First, beneficiary designation. You can actually designate beneficiaries to receive either a one-time lump sum payment or ongoing monthly benefits. Now, as for who qualifies as a survivor, the law defines this group to include spouses, registered domestic partners, unmarried children, under certain age and disability conditions, and dependent parents. It's really crucial to notify CalPERS promptly if a member passes away. This helps make sure eligibility is determined correctly and prevents benefits from being paid to someone who's no longer living. Oh, and just so you know, CalPERS benefits can be paid in addition to Social Security benefits thanks to the Social Security Fairness Act that was signed into law in early 2025. All right, let's get into Section 9, pension loans, and do a little myth busting. It's really important to note that you can't borrow against your CalPERS pension. This isn't like a 401k. There are no pension loans and no early withdrawals. Your money stays locked away until you retire or separate from service. So, since CalPERS does not offer personal loans or hardship withdrawals directly from their retirement accounts or member contributions, you might be wondering, what can you actually do? Well, the CalPERS 457 plan does offer a loan feature. This means you might be able to borrow against your vested account balance in the CalPERS 457 plan. Here are a few key points about CalPERS 457 plan loans. First, loans from the CalPERS 457 plan are secured by your vested account balance, whether it's pre-tax or Roth, if that applies. You can't use other assets as collateral. For loan repayment, you can transfer account balances from other plans with outstanding loans, as long as they're maintained by a CalPERS 457 participating employer. But further transfers won't be processed until your loan with the CalPERS 457 plan is paid off in full. And if you default on a loan, meaning you fail to make a scheduled payment within the grace period, your loan will be considered in default. This could lead to your vested account balance being offset by the outstanding loan balance. Also, the distribution made for the loan repayment will be treated as earned income, and you'll receive a 1,099R. To learn more about 457 plans, check out the playlist linked in the upper right corner. Just a quick but really important note. Borrowing against your retirement savings can have some pretty significant consequences. It reduces your future retirement income, and honestly, can have tax implications too. If you're thinking about taking out a loan, it's a good idea to carefully review all the terms and conditions, and definitely consider consulting with a financial advisor. So, let's talk about some other potential options for CalPERS members. If you are leaving CalPERS-covered employment, you can actually elect to receive a refund of your contributions plus interest. But just keep in mind, this ends your CalPERS membership and any future pension and health benefits. Also, there's the CalPath Home Loan Program, which is available through Mountain West Financial. It's specifically for members of CalPERS, CalSTRS, and other specified public employee systems. All right, moving on to retirement healthcare. Many CalPERS members qualify for retiree healthcare benefits, depending on your employer's agreement and your years of service. You might get premium subsidies, and Medicare coordination applies after you turn 65. Oh, and some employers actually require more than 20 years of service for full coverage. Honestly, healthcare is often one of the biggest retirement expenses, so it's super important to check your employer's plan early. So, to make the most of your CalPERS benefits, consider a few key actions that can really set you up for success. Start by reviewing your annual member statement, and definitely try to attend CalPERS retirement workshops. It's also a good idea to use the My CalPERS online portal, and if you can, meet with a CalPERS counselor before you retire. Your pension is honestly a powerful tool for long-term security. Understanding how CalPERS works today can help you retire with confidence tomorrow. As of June 30th, 2024, CalPERS's estimated funded status is 75%. This indicates that the fund has assets equivalent to 75% of its total liabilities. The funded status increased from 71.4% in 2023 due to strong investment returns and employer contributions. Now we'll get into the outlook of the investments within CalPERS and how they plan to increase funding levels. CalPERS is focused on securing the retirement future of its members by managing its investments efficiently and sustainably, while also prioritizing climate solutions. It's investing in climate solutions, aiming for a target of $100 billion by 2030 to reduce emissions and achieve net zero emissions by 2050. The fund also emphasizes diverse and emerging managers, focusing on private equity investments. Here's a more detailed look at CalPERS's future. Investment strategy, climate solutions. CalPERS is actively investing in climate solutions, aiming to commit over $100 billion by 2030 and achieve net zero emissions by 2050 according to top1000funds.com. This includes investments in climate adaptation, transition, and mitigation efforts. Sustainable Investments 2030. Strategy. This strategy outlines CalPERS's commitment to reducing portfolio emissions by 50% by 2030 and reaching net zero emissions by 2050. Diverse and emerging managers. CalPERS is investing in diverse and emerging managers, particularly in private equity, to help build a more inclusive and diverse investment portfolio. Private markets. CalPERS is increasing its allocation to private markets, including private equity and private debt, as part of its long-term investment strategy. Asset liability management. CalPERS investment strategy is guided by its asset liability management framework, which evaluates the portfolio's ability to meet future pension costs. Member benefits and funding, retirement benefits. CalPERS's mission is to provide retirement and health benefits to its members and their beneficiaries. Health benefits. CalPERS offers various health plans to its members, with premiums reviewed and adjusted annually. Funding levels. CalPERS funded status has improved, with the estimated funded ratio increasing to 75% as of June 30, 2024. However, the system's funded status can still change significantly due to factors like investment returns. Contribution forecasts. Projected employer contributions are roughly level or decreasing for many plans, due to the higher-than-expected investment return for fiscal year 2023 to 24. Other key areas. Board elections. CalPERS holds elections for its Board of Administration to ensure representation of members' interests. Policy engagement. CalPERS actively engages in policy and regulation that promotes sustainable investments and supports the energy transition. Organizational strength. CalPERS is committed to building organizational strength and ensuring its ability to effectively manage its assets and liabilities. And there you have it, a complete breakdown of the California Public Employees Retirement System. If this helped you understand your CalPERS benefits, go ahead and give us a like, share with your colleagues, and subscribe for more content on retirement, finance, and public service careers. Stay informed, stay prepared, and here's to your bright future ahead. If you want to learn more about public employee retirement training or improve your financial literacy, create a financial plan for yourself and your family, or start planning for retirement but are not sure where to begin, be sure to check out the Retirement Roadmap and other resources in the description below. We hope you found this video helpful. If you did, share it with a fellow teacher or public employee. Be sure to like, subscribe, and hit the bell so you don't miss any future videos. Drop your questions or any future videos you want to see in the comments, and thanks for watching.